Hey, YouTube fans and friends and relatives. It's been a long time. I haven't had really a good opportunity to, um, talk about what is happening, what I've learned, and man, it's been a minute. So I hope that you guys are still out there. I know a couple of you are still out there. And you've been wanting me to put together something on what I've been doing lately. A lot of success, a lot of success, a lot of things learned. I'm not one for really putting up results. I think that's, kind of, results are personal. And I don't want to really get into that. I just like putting out things that I found successful and that are data driven. Okay, number two, successful and data driven and things that you can back test yourself. All right. So this came about from studying, some of my older trades where I was constantly struggling. Like out of 10 trades, I was probably hitting about a 3 out of 10 average. So I went back into those trades and ran that by some of my higher up, more experienced mentors. And they asked me some questions that were very insightful questions, right? Made me think, okay, and this is where this comes from. When you're trading, and this is the question that they posed to me. When you're trading, do you know what part of the cycle that you're in? And I didn't know about, I didn't have a way to really answer that. And so the second question was, when you're trading, do you know what part of the cycle you're in? That's what this guy kept asking me. And I really just replied with, no, what do you mean by that? And he gave me a really insightful kind of piece of advice, right? And this is where we're going to talk about today. So, um, one of the things that you're always thinking you need to do as a beginner trader is you think you need to predict the market, and it's not about that. Okay, it's not about prediction. It's actually the opposite, about participation. So, inviting you to take a look at the ADD indicator and put that on your chart, put like this, and let's just think about that for a minute. Without even really getting into what it is, this is the last, we're on a 30-minute, let's put the last 20 days up. And on the top graph, what you see is the ADD, the Advanced Decline Indicator. What that is doing, I don't want to get into what it's doing because there's tons of videos on what it is. Just look up what is ADD, and there's like only a few good videos. There's not many people that even talk about this, which is crazy. But check out what is ADD, and basically what it is a breadth indicator, not breath, but breadth, well, market breadth. Giving you an idea of how oversold or how much overbought the market is. So the market is really cycling between two phases of extremes, okay? From extremely oversold to extremely overbought, okay? And right now we're doing some back testing right now, but right now you can see that we're on the other end of the spectrum. We're on the oversold end of the spectrum. Okay, so when you're on this side of the market cycle, what are you expecting to see? Now, if you're a trader and you've been looking at a lot of charts, what are you anticipating seeing on the actual chart? Okay, you would be expecting to see on your 1 hour maybe a bullish candle formation, and then retracements into that range, and then you could get in with a scalp, or you could ride the wave back up. Okay, now that was a powerful concept for me, because it really takes a lot of the thinking out of the equation. You're not thinking about what it's going to do, but more so you're participating and thinking about, well, what is it doing? All right. So let's just look at this chart we're in right now. And this is going back to November 9, year 2021, doesn't matter. But what you see this on the ADD is that you're on the bottom end of the cycle. Out of 2,000 stocks, a good majority of them are signed off. They're sold off. Right? All right, so let's just kind of close that up. All right, now what you see here on the tick is just like, almost think of that as almost like the micro shifts that are happening on a minute by minute, second by second basis. The tick is look that one up, $tick, if you don't already know about it. And what that's telling you is just on a minute by minute, put it on your 1 minute chart and just look at the cycles that are happening on a minute by minute basis. Okay. So on a minute by minute basis, you are able to see the shift of the market. And typically there's a cycle that's happening, a little micro cycle that's happening every 15 minutes. Okay, like the duration of that cycle is 15 minutes. The duration of the ADD cycle, the entire market cycle, the bigger cycle, is about 24 hours. So to get from this point to this point typically is, this was going back to Friday, and then it took to Monday open to sell off to the other extreme of the market cycle. So what we're doing is we are definitely in a different frame of mind by putting these two things on our chart, in that you are now able to look at, one, what part of the cycle am I in? Am I in the continued sell-off, or has the market started to reverse, right? So right now, you can see that the market is still, it hasn't reversed yet, because we're on our 1 minute over here. And you can see, here's the 200 period moving average. There's, the market is still below the 200, below the 150. Okay, so we're still in the sell-off. The last entry, what was the last entry into this movement? Okay, so last entry, that's where you would have used your tick. And you can see it right here at 11:45. Okay, right there at 11:45. You pulled back and sold off probably 9 to 10 points. Okay, so it was right here to here. So you would have entered long on this signal and came out here. And that was, that was a 9-10 point move in just 1, 2, 3, 4, 5, 6, 7, about 10 to 15 minutes you're getting out on this other side. Okay, and you would have still been in if you were trailing on the 1 minute or so. All right. The entry before that was, let's look at some of these other entries right here. See, right in here, you had a small pullback, and you would have been out on this candle here. So you would have been in at 11:30 up in here, and out here at 11:37. So these are the really almost like quick moves that are happening in the market. But the tick can help you with getting the entry and exit right, especially if you're on that 1 minute chart. Here's another one. See, you're right here at the extreme of when the market was, at a pretty good overbought level. 386 stocks were overbought, and you could exit here. There's an exit signal here. So we would have been entering on this green candle at 4675, and you're exiting here at 4672. That's a 3-point move from here to here. And you're also, you're using your stochastic or CC or your oscillator. See, here is 4681. You can see it here. Okay, 4681, and you're out at 4668. So that's almost like 7 or a 9-point move right here that you could have captured using these two. This guy's telling you what side of the cycle you're on. The ADD is telling you that we're still selling off. We're still, even though we're at this extreme, the market is still moving down. It can move down to negative 1,000 or negative 2,000. The point is that you're still in the sell-off phase. All right, and the tick is telling you exactly in that cycle when to get in short and when to exit. When to get in short, when to exit. When to get in short, when to exit. So right now, and this is back testing. So on Thinkorswim, the software can be delayed, so we might not be seeing the actual reaction on the tick that we're seeing on the chart. So right now we're clearly in a down cycle, down phase, and you're just picking off these short entries here using your tick and your ADD. You can also incorporate the VOLD, vold, volume up and down difference. Let's see if that loads up here. I think the tick might be a bit ahead of the actual price chart when we're doing this back testing, right? But the vold, some people, volume up, volume down difference. Some folks think that this is the number one thing you should be looking at. So what the vold is telling you is how much volume is going into downgoing stocks versus upgoing stocks. So when it's negative, you want to be on the bullish side. You want to see a bullish chart. You want to see, okay, candles are closing lower on the 1 hour, on the, whatever time frame you're referencing. And then you also want to make sure that number two, the advance, that there are more stocks declining than going up. Makes sense. And then 3 should be Okay, now in that, movement, okay, in this cycle that we're in, how can I go short and exit correctly? How can I go short and exit correctly? And that's where you use these micro, these real quick micro moves that the tick is telling you, that you're coordinating with on the tick. Okay. Yeah. So I think that's, this has helped me. This setup has helped me more than anything. It keeps you on the right side of the market. Number one, it keeps you on the right side of the cycle that's happening. Number one. Number two, it helps you get in and get out without human emotion. Okay, because a lot of times what'll happen when you're a human is that you'll get in right. Okay, you'll get in right. Okay, oh, this is a pullback. I'm seeing this on the CCI. But then when the market starts moving faster, you're thinking, oh, it's gonna sell off. It's gonna sell off further. Let me hold on. And then boom, it reverses on you, and you not only lose your profit, you might even lose a little bit because your stop loss is way up here. But having the tick tell you exactly what to do, get in here, get out on the opposite signal. Get in here, get out on the opposite signal. Okay. And if you don't make a lot, well, you wait for the next one. You wait for the next entry. But that has helped me stay unemotional, and I've noticed because of that, I've noticed a big difference in the rate of success of the trades. Like out of 10 trades, I'm doing like an 8 out of 10 or a 7 out of 10. And when I do lose, you're not losing a 3-to-1. You're losing a 1-to-1. That's the other part of it, is that if you are risking 1 to make 1 to make 1 or 2, that's where you should be. And then when you do lose, you don't want to be losing 3. And that's what happens when you don't have a guidance system like this. So I'm still getting this. This has just been like a couple months of doing this, and I might post some results. I might post some stats one day, but I just don't like doing that. I feel like my goal with these videos is not to put out results and say, oh, look at what I did. It's really just to say, hey, this is something that is working for me, and it might work for you. Because what I've found with a lot of traders is that even if you give them the gold, you don't know what they're going to do with it. They're going to do whatever they want to do with it. They might adapt it to their strategy. They may not. They may take one part and use the other part. So it's really, to me, at the end of the day, it's not great to say, okay, well, this is it. This is the thing you got to do. Everybody's individual. Everybody's different. I've come across, software and traders that have huge success rates, and I haven't used everything that they use. I don't do exactly what they say. I just take away what they, some of the things that they've given me and correlate that with what I've already learned on my own. So this has been great for me. I think, what we do in the beginning is we're just looking at the price chart, right? We're just looking at this price chart, and we're trying to figure out what the heck is going on. And when you do that, you're not tuned in to the bigger cycle. the more cycles that you observe, when you put this thing on your chart and you start looking at the cycles, you're gonna be surprised at how this thing can help you anticipate reversal in the market. See here, at this entry point, okay, you're still short here. The market has not reversed, so you're still short. There it goes. See? Right. Okay, so you were short here, even though it looked like things were reversing. You're still under the 200. You're still under the 100. You're still under the 25. This is your point of entry right here. See, the tick told you, like, you're getting close. And within the next minute, that's when the entire market started to sell off. Okay. And probably on some higher time frame, we can try to do that. Let's try. Sometimes it messes up though, but let's see what the half an hour looks like. See, in the half hour, you're still inside of this candle's range. Let's draw a little line there. You haven't broken that level yet. Okay, those are the highs and lows of the previous period. So once you break this and you start closing above this level, 460. All right, here's another one here. Okay. Then, and I mean close like on the hour close. Then we are looking at a real reversal. I'm anticipating a reversal, right? Because look at where you are in the cycle. You're oversold. But I'm not gonna hit, and this is the difference. This is the difference. You are anticipating a reversal because the market is in an oversold state. It's 11 o'clock. You got a lot of room to reverse and go to the other side, and a lot of time to do it. But here, see, you haven't closed above that 1130 candle. Let's go down to the 1. Okay, see where you can see where our resistance levels are. And we haven't broken them. Okay, and this is, I'm saying all this to you're continuously going back. You're like, okay, where am I in the cycle? Where am I in the tick? Where am I in the chart? Where am I in the cycle? This is another form of cycling, but on a micro cycle. Where are we in the chart? So we're still making lower lows, even though we're at the bottom of this cycle. Okay. Go to the half hour, and you can go down to the 15. Yeah, even on the 15, you have a lower low. The tick is still hanging out here, up here, still overbought. And it's 12 something. Okay, so you can speed everything up on your TOS platform by hitting that fast forward button. Okay. So you're still, if you were to have to take a trade right now, you would still be going short. You take this down to here. You would take this short. There it goes. You would take this short and try to close lower. You would try to go for a lower close. Stop loss above the 15-minute or whatever time frame you are trying to play. It looks like it feels like, and I haven't played this, but it kind of looks like it feels like a reversal about to happen. The tick is moving, is not closing down here. It's not coming down here. So, but I'm not going to continue this video through that. Let's see, we'll stay here for a little bit longer. 12:21. See, the market's still closing lower. You would have entered, if you got it right, you would have entered short right here. I don't know the exact price, but you would have entered short right here, and you're still in. Your stop loss is up here somewhere, either on this one, above this level, or it's above this level. Either above this stop or this stop. Okay? And you are trying to exit down here when the tick gets down to this level, negative 350. Anything lower than negative 350. Okay, that's why I kind of like to have the standard deviation on, because that is a real good. I don't go for absolute values. Like, okay, I gotta see 1,000. No, you don't have to see 1,000. What I want to do is I want to see something that's a little bit out of the norm, right? So you're entering short here, exiting short here. That gives you good trades. Okay, let's go down to the 1. All right. Okay, there you go. There you go. Okay. And now you can see you close past the mean, right? You close past that mean number. Let's see if we can get to negative 350. There it goes. Okay, now that is your exit. So in this scenario, you got in here, okay, at 12:10 or 12:11, somewhere in there. Okay, so let's see where we were. At 12:10. You close, and you want to get in on the green. 12:11, 12:10 is here, 12:11's here. You're in. Look at your CCI down here. You're at 183 on the CCI. Okay, so you're in there, and you'd be up about 5 ticks right here. So with the ES, that's one contract, that would be $50? With the small contract, that's 5 deltas, that's 25 ticks. I might be off. With the ES is 10. So I think you'd be up 500 if I'm not correct. I need to review that because I've been playing MES. But MES is 5 deltas, so you would have, you'd be up about, if you got out here at 12:26, you would be up 4 or 5 ticks, somewhere in there. and you're only risking, remember these were our levels that we were interested in, you only were risking 7 ticks, and you basically hit 5. Okay, right. So you're risking 7 and you got 5, a near 1-to-1. So it's not bad. And then you're using your these two guys, the ADD and the tick, to time and coordinate that entry and exit. Okay, look at your CCI when you got out here. -1, -100 or so is good, but you're also looking at the tick. See, this is starting to, well, it actually came back up and gave you another signal right now. Overall, I mean, you can kind of see that this is it's reversing. You see, you don't have a lower low here. On this cycle, you put in a low, you pull back, you put in another low, but this low is higher than this one. So it looks like there's a reversal in the making. Plenty of time left. It's 12:30. Let's see. We're fast now, so what I'll do is pause this and see what happens. Then I'll